Okay. Great. Okay. Well, good afternoon, everybody, and welcome to the 2021 Virtual Ag Solutions Fair. On behalf of all of us at SUNY Cobleskill Institute for Rural Vitality and our partners at National Grid and NYSERDA, thank you for joining us this afternoon. To kick off the webinar series, you'll hear from Nate Rudgers from Farm Credit East, Gary Pereira from USDA Rural Development, Paula Bagley from USDA NRCS, and Jacob Evans from FSA, as they discuss programs and resources that their organizations have available that are relevant to your agribusiness. Following the 1 hour webinar, we will have a Q&A session. You can submit your questions through the Q&A chat option in Zoom or in the comment section if you're watching on YouTube Live. If we do not get to your question, we will send it to the presenter for follow-up. All Ag Solutions for webinars will be recorded and posted on the SUNY Cobleskill website for you to access. Additionally, to be conscientious of your time, the presenters' full bios will be posted on the SUNY Cobleskill website. Now that it's 2 o'clock, we'll go ahead and get started. I'll throw Nate's presentation up on the screen in just a second, and the mic will be yours, Nate.
Okay, thanks, Seth. It's good to be with you all. Thanks for inviting me to be on today, and great to have the opportunity to talk a little bit about the farm credit system and what we can bring to the table to assist farms and agribusinesses across the Northeast in developing new projects and reaching access to capital. The Farm Credit is not a government agency per se. It is a government-sponsored enterprise, and I'll explain what that is in our next slide. So the Farm Credit System was chartered by Congress in 1916. It is a system that was designed to provide credit to the agricultural industry regardless of the current conditions, and to provide credit in good times and bad. It consists of 69 retail credit associations across the country, and they are specialized, integrated, full-service lending institutions. They are not banks per se, in that we do not accept deposits, but we lend funds. And across the country, we're approaching 300 billion in loans to the agricultural industry, and roughly 65 billion in capital, and we have over 500,000 customers and more than 1 million loans to farmers on the books currently. Next slide, please. So if we don't get money from deposits, where does the money come from that we lend to producers across the country? Well, the federal charter allows the Farm Credit System to issue bonds, and those bonds have the same credit quality as U.S. Treasuries because they have the implied guarantee of payment by the U.S. government. And the funding Farm Credit System Funding Corporation issues those bonds, and bond dealers then market them to U.S. and global investors. The funds then flow back to 4 farm credit regional banks or system banks, and those banks in turn lend that money to the retail associations, who then provide those funds in the form of loans to our member borrowers. Next slide, please. So each of the farm credit associations is actually a cooperative, and so we are owned by the borrowers who borrow money from the association, and our board of directors is made up entirely or almost entirely of farmer members from across the Northeast. The Farm Credit East service territory, as you can see, is Maine, portion of New Hampshire, and the rest of New England, New Jersey, and most of New York State. We have 20 offices in those 7 northeastern states, about 475 staff members, and we've actually now just gone beyond 8 billion in loan volume. And we serve about over 15,000 customers across the 7-state area. And as far as commercial farm lending goes, we have about a 70% market share. Next slide, please. So we are a cooperative. We're governed by 16 board members, and 13 of those are elected by our membership. One's a customer appointed director and 2 are outside financial experts. Next slide, please. So we provide loans to all sizes of agricultural businesses and all types of agriculture across the Northeast. We serve both full-time and part-time farmers, and we are a cooperative, which means that our profits are funneled back through to our borrowers in what's in a form of a dividend called a patronage. Our lenders, our loan officers are key to this experience in that they develop strong relationships in the communities where they live, and they are on farms, get to know the farmers, our customers well in the region, and develop strong long-term relationships. We provide a steady supply of capital through all economic cycles that face agriculture. And we were originally created because commercial banks had a tendency to come into and go out of agricultural lending as the financial conditions changed, and that unfortunately is still the case today. So the farm credit system, because we are required to focus only on the agricultural industry in rural America, stays completely committed to those industries. And we continually provide the type of funding that's necessary to support the agricultural industry across the country. We offer equipment leasing programs as well through Farm Credit Leasing, and we do commercial and agribusiness lending to organizations that supply inputs to the agricultural industry, as well as processors who process agricultural products. We offer USDA Rural Development and Farm Service Agency guaranteed loans. So we cooperate with both Farm Service Agency and Rural Development in providing those loans with which they guarantee. Next, please. So as you can, this is a description of our portfolio and roughly what this is sort of a snapshot of what agriculture looks like in the Northeast U.S. So we're run the gambit from the dairy industry, which is our largest individual sector, simply because it's also the largest individual sector of the ag industry in the Northeast. Two cash field crops, timber. We're into timber and timber processing, lending relationships, livestock industry, processing and marketing, fruit, aquatics, farm services, vegetables, greenhouses, nursery, potatoes, cranberries, and farm market, farm retail operations, as well as small scale agricultural processing organizations as well. Next slide, please. So I mentioned that we provide a dividend to our borrowers through what's referred to as patronage. And this is our way of distributing resources back to our members. And it's based on the amount of money borrowed by individual members in any given year. And this past year in 2020, we paid out 89 million in patronage dividends, which is equivalent to 1.25% of average eligible loan volume, which in essence equates to reducing the interest rate on loans provided by the association to by 1.25%. And this is an increase from about 1%, which has been the patronage payment for the last 18 years. So we paid out two different payouts this past year, one in July to help folks that were dealing with the adverse effects from COVID of 0.5%. And then we paid out the other 75 basis points or 59 million in February of 2021. This is in addition to our already very competitive rates. So it's really a tremendous benefit to be a part of the organization and be able to receive these patronage dividends when offered. Next slide, please. Not only do we lend money to the agricultural industry, we also provide important business services to our client members, including payroll services, record keeping, tax planning and tax preparation, which is our busy time right now, getting those out, business consulting, of which that's the unit that I'm a part of, appraisal services, estate planning and farm transfer assistance and consulting, financial benchmarking, crop insurance, and through our Crop Growers LLP division, and finally grant writing, which is where I spend most of my time. Next slide, please. So we have a specific arm that does just country home loans. So we do mortgages for folks who are not necessarily engaged in active agricultural production, but might have small property in a rural setting that is a residence. And we do a significant amount of financing of rural residences and small farmettes across the Northeast as well. Next slide, please. So I mentioned crop insurance. We are a member of Crop Growers LLP, which is owned by 3 farm credit stakeholders in the Northeast. And they are crop insurance specialists that are salary based. And there are 21 crop insurance agents across our territory. And we have 2 dedicated agents specializing in serving only small farmers. We provide risk management solutions for 34 different crops. So 34 different crops have crop insurance associated with them. And we have a centralized operations center for customer service and policy processing. And we serve farmers in the 9 northeastern states. Next slide, please. So one of the programs that we started several years ago was Farm Start, and it was a way to further assist new small and beginning farmers with funding that provides up to $75,000 in seed capital. So this would not be a loan per se, but it is a equity investment in small farm operations that would help make those small farm operations more bankable. And that money then is payable back to the program after 5 years. But it gives a good start. And so it's not considered debt at the beginning of a farm business's life. And we also provide through this program important business planning and business organization and structural consulting as a part of the Farm Start program. It's been going now for 15 years, and it's helped get more than 280 new small farms off the ground and nearly 13 million in overall investment. Next slide, please. We also provide incentives to help cover the cost of our consulting services, our payroll, et cetera, to young, beginning, small, and veteran farmers. And so those incentives include discounts on our financial services and payment of FSA guarantee fees and more. And further to that, we offer a training program called Generation Next, which helps the next generation of farm owners and managers learn about the tools necessary to be good farm managers and understanding the nuances that the older generation has figured out over years of operation. But that training program comes up yearly, and we normally have a robust class of young people participating in our Generation Next program. Finally, we are identified as a Farm Service Agency preferred lender for their guarantee program, and that's a relationship that we take seriously and value. Next slide, please. We offer important information in market trends and market development, and this is called our Knowledge Exchange program, which provides industry outlooks, business insights, and other content to help members run their businesses better, and provides good customer education. We offer newsletters, reports, and webinars available to policymakers and other stakeholders. And we have a dedicated staff that is leveraging both our other staff resources, stakeholder and customer expertise in developing the Knowledge Exchange program. Next slide, please. We provide some significant stewardship initiatives to support the agricultural industry in the Northeast, including industry and event sponsorships through the Northeast Ag Enhancement Grant Program. So if you have a regional activity in the agricultural industry that you're putting on that you think might be worthy of support from the Ag Enhancement Grant Program, please reach out through the Farm Credit East website and search out that grant application, and we'll be happy to try to help fund your effort. We support the Case Ag Business Curriculum, and we offer a significant number of scholarships to our young people in our membership territory, service territory, to support their agricultural education. Next slide, please. And that's it for my presentation. Thank you very much.
Thank you,
Hello, everyone.
Oh, go ahead, Gary. It's all your.
Okay, thank you. Thank everyone for coming today. I know it's a little bit different circumstances, and I'm sure hopefully in the near future we'll be able to meet up again in a more face-to-face approach. But I did want to cover today the Value Added Producer Grant Program and the Rural Energy for America program. My name is Gary Pereira. I'm a business program specialist for USDA Rural Development in New York. I cover, depending on which program, either half the state or all the state. But we have a team over here in New York that I have listed in a few slides later on that has all the contacts for the rural business programs, which administers under rural development these two programs that I'm going to go over today. So without further ado, we'll just go into the value added program. So I wanted to cover this one first because if you're going to get anything out of this presentation from me today, it's this is the one that's actually open right now, and it has significant amount of funding available. And what it does is it provides grant funds for planning and working capital expenses to help ag producers, so farmers, enter into value-added activities. It expands markets and increase the financial return to the farmer, basically, is what we're looking at doing, or what the program goals are. And also the program goal is to strengthen the rural economy. I also want to stick this right here in the earlier slides, is that the program is open right now for applications with the deadline of May the 4th. It was extended from sometime in March. I think it was sometime mid-March. It was originally set for a deadline, and then it got extended because the addition of COVID relief funds that was added on to the additional to the mandatory farm bill funds that was from the 2018 farm bill. So we have over $70 million nationwide, which is I think the most this program's ever received in one funding period. So what I'm trying to say is, if you have a project and you're thinking about applying, this would be the year. The goal would be to start now, technically yesterday, because this program does take a bit of time to apply to. It's not exactly a cakewalk, because it does require a lot of homework to be done prior, a lot of business planning that needs to be done for an application. But overall, they've done studies, and farmers who utilize the Value Added Producer Grant Program are more successful than farmers who don't utilize the program. And a lot of that really comes down to the required planning that the Value Added Producer Grant Program requires farmers to do prior to receiving grant funds. So there is a lot of business planning involved, and that's with the hope of success for the value added enterprise. So next slide. So just basically, what is value added? It's basically comes down to an ag commodity that has completed one of these 5 items. The most typical one is undergone a change in physical state. So if you grow a tomato and you make tomato sauce from that tomato that you grow, you can't return it to its original state because you've modified it. So it's a change in physical state, and this is typically what most applications fall under. And then there's also the ability to go under the value added eligibility of producing in a manner that enhances the value of the commodity. That's like certified organic would be considered under that category. Physically segregated, so where it's grown, for example, or raised, will allow you to name the product something different. One of the best examples I have for that would be something like Blue Point oysters, because of where it's grown or raised. They get to be called Blue Point oysters versus just regular oysters, and then also fetches, by having that name, a higher sale for the product. And then converted to renewable energy source. Really, this kind of is a little bit misleading, but basically you're looking at an on-farm ag commodity that's converted to renewable energy. And our typical best example is going to be anaerobic digesters. Under the program, though, as you get, we'll go in a few slides, the working capital element only allows you to really utilize funds for upkeep and maintenance of the anaerobic digester. So there's not really much you can do. And I don't think to date New York has funded any renewable energy projects under the value added program. And then finally, the second most popular, second to only a change in physical state, is marketed as a locally produced ag food product. So where in the change in physical state, you had to, slice or cut up the product. The locally produced ag food product can get you there if you raise or grow the product within a 400-mile radius, and you sell it within a 400-mile radius. You sell it within a 400-mile radius or within the state of New York. I believe that gives you a selling area as far up as Maine, into Canada, and down as far into Washington, D.C., I believe would be the southern bound of that 400-mile radius, depending on where you are in New York. Next slide. And these are going to be your eligible applicant types. As you can imagine, the first one is going to be what the majority of, I think 90+% fall under as independent producers. So that's going to be your farmers. Ag producer groups are going to be like the Grape Growers Association, the Apple Growers Association. These are nonprofit groups that are made up of independent producers, basically, and their products are going to benefit independent producers. Farmer rancher cooperatives, and finally majority controlled producer-based business venture. They're going to be your companies that are into ag processing, but they also are basically owned and operated by independent producers. So the farmers are going to own this venture. Basically, the biggest caveat is you must currently produce and own at least 50%, greater than 50% of the ag commodity. And basically, this eliminates any kind of middleman operation that are strictly just processors that don't actually grow or raise the ag commodity. They're not eligible for this program. This program is here for specifically increase the income directly to farmers, with the farmers being the applicants. Because you get a lot of middlemen that come in and they say, well, we're helping farmers, and it's like that's admirable, but this program, the way it shapes up, it's got to be directly a grant directly to the farmer. Next slide. So the maximum grant amounts, you can apply for up to 75,000 for planning activities, and you can apply for up to $250,000 worth of working capital activities. You can only apply for one or the other. You can't do both in a single fiscal year. And you have to, if you have a previous grant or you're awarded the grant, you must finish the grant prior to applying again to the program. So for example, if you apply for a planning grant, you have to complete the planning grant prior to receiving a working capital grant. And there's no requirement that you have to get a planning grant first, then do a working capital. You don't need to do that. And the grant period can be up to 36 months. And finally, I don't think I have another slide, but the planning and the working capital typically require a 50-50 match. So for every dollar of grant funds you request, you need to have $1 worth of either cash match or in-kind contribution. Typically, we tell people that in-kind is not as, we like to see applicants with cash match over in-kind. This year, and this year only, they're allowing equal consideration for in-kind and cash on a point scale. And also this year, the COVID relief funds I mentioned earlier, which is about a little bit over 30 million nationwide, those funds only require a 10% match versus a 50-50 match. So that significantly lowers the application requirements for this year and this year only. So really, where you would end up tripping up on an application is just not submitting a thorough and complete application. I find that to be the only area that you can have trip up this year, and it's not going to be something due to not having enough cash match or and then also only having in kind. It really comes down to just the how well you can put together an application is going to really determine the success of this year versus not, because there is a scoring minimum. I believe it's 50 points, 50 or 55 points, somewhere around there. But that's a pretty easy bar to jump over, to make sure that you get selected for funding this year. Next slide. So the planning activities are going to be things like if you needed to conduct a feasibility study, a business or marketing plan, or a legal advice for entity formation, on the flip side, you can't use it for any kind of like construction or planning for construction. This is going to be more on the actual operation of the entity. The other piece is that these items need to be done by an independent third party. You can't pay yourself to do a feasibility study with the grant funds. You can't, you can consider some of your time assisting with it as in-kind contribution, but you can't utilize it to just pay yourself. You have to have a consultant in mind, and that you would submit with your application of who you're looking to hire. Working capital activities are basically to pay the operational costs directly related to the value-added project. You can view this almost as what you would see on an income statement as the expenses for operations of that specific value-added project. And really, you look at it from if you're growing a crop post-harvest, would be considered where you start eligible cost. If you're raising animals, it's going to be the moment they enter onto the kill floor, and forward as being eligible costs. So anything before that, any of the raising the animals, growing the animals, would not be eligible. That's considered basically ag production. And the items that you can go under would be like employee salaries, utility cost for the facilities, the value-added facilities, additional inventory, inventory for boxes, labels, packaging materials, jars if you need to buy stuff, basically to put the product into, marketing campaigns, and you define that. So if you wanted to do your own marketing directly, and you would contract directly with advertising companies, you can do that. You can hire a company that will do it for you. You pick it. Supplies, accounting systems, etc. So it's basically, like I said, the expenses the day-to-day expenses that you need to run the business. Next slide. The things you can't use it for: you can't use it to purchase equipment, buildings or facilities, no vehicles. Grant preparation fees are not eligible. You can't use it for ag production or harvesting cost, but you can use the grant funds though to purchase the 49% or less of the other crops that you're going to be if you only produce at least 51%. You can buy technically 49% from other farmers. So if you're making wine and you're growing 75% of the grapes, you can use the grant funds to purchase the other 25% from other vineyards. That is okay. And no cost incurred prior to grant approval. So if you had invoices dated the day before the day you signed the grant agreement, we wouldn't allow that. So next slide. There's a link to our application website. You can download the application template and all the standard forms. We always tell people to follow the instructions very carefully. Last year, we had a bunch of projects that get kicked out because they didn't properly explain how the farmers were actively involved in the day-to-day farming activities. So, for example, if you're somebody who quote is a farmer or owns a farm, but you're, really some wealthy individual from, some large city and you've never actually seen your farm, you're not eligible. You're not considered an independent producer. You have to actually work on the farm, and all the members identified. So if you have, an LLC and there are 4 owners, the 4 owners need to be involved in the day-to-day activities of the farm. So in the application, a lot of people missed that. They didn't explain thoroughly enough how they were involved in the day-to-day activities. But this program did kick out last year, people who didn't properly fill that section out. So always follow and read the instructions very carefully. We do value a lot of third-party information backing up your specific venture, and that does help with scoring. Support letters, we want to see that. If you have commitments to buy your product or sell your product in different stores, having those letters definitely go a long way. You can either submit through grants.gov or better yet, submit a paper copy or email a PDF of your application directly to me. We prefer either it be emailed or submitted in a paper copy because the deadline for grants.gov is actually a few days earlier. So, our recommendation is to submit it directly to us. All right, next slide. I believe we're going to go into this is just some examples that we have of previous applicants that have gone through the program, just some of their products. And I'm sure if you ask them, they'll probably tell you how much of a pain the program is, but I'm sure they'll say, some good things, I'm sure as well. But for them, I think they've all, I think all the common trait is that, the grant program is tough, but actually doing these business ventures was a lot tougher, just because any kind of new business venture is difficult, no matter what. And I think ag business ventures are probably one of the most difficult. So next we're gonna, I think, go into the REAP program. Excuse me. The Rural Energy for America program, which we abbreviate to REAP. It's created in the 2002 Farm Bill and expanded in 2008, 14, and the finally 18 Farm Bill. So, just like value added, they're both, it's very, it's a long-standing program. It's for grants, loan guarantees for renewable energy installations and energy efficient improvements. Next slide. Energy efficient improvements are going to be anything on the farm or rural small business. It's verified by an energy audit. We can consider eligible. And renewable energy, wind, solar, biomass. We're going to be doing solar, but we can do other commercially available renewable energy technologies. Next slide. Loan guarantees. We can do loan guarantees up to 75% of the total project cost. More importantly, if you have smaller projects below, and we typically define it as below $200,000 in project cost, we recommend looking at just a grant program. The grant program can cover up to 25% of the total project cost. And you see the maximums there. Next slide. Eligible applicants are going to be your ag producers, and that's people who get at least 50% of their gross income from the ag business. If you can't meet that definition, you can apply as a rural small business, and you have to meet SBA size standards. So, one of the other farms are going to be eligible. As long as, if you can't meet the ag producer, you can be a rural small business as long as you're located in a rural area. Next slide. Grant deadlines are going to be March 31st. I know it just happened. If you do request 20,000 or less in grant funds, you have an additional deadline of October 31st. So you can submit either March 31st or October 31st if you have a 20,000 or less grant request. All other grant requests, March 31st is the deadline of every year. Next slide. So these are going to be the contacts. I'm sure this is going to be available publicly. So, if you don't, somebody can get you over to us if you need to. So I guess we'll handle questions later. And I'm going to hand it off, I think. Is it to FSA? Oh, NRCS, sorry.
Hi, this is Paula Bagley. I'm the State Conservation Engineer for NRCS New York, and I'm here to talk to you about NRCS's programs for on-farm working lands programs. Oh, next slide, please. I'm trying to use a space bar over here. So a little bit about NRCS. We are a non-regulatory agency under the U.S. Department of Agriculture. We work closely with farmers and communities and other groups to protect the natural resources on private lands. We work side by side with our customers to identify the natural resource concerns that they may have on their property and to address them by restoring and protecting those resources. NRCS offers both financial assistance and technical assistance to our customers to help them address resource concerns and maintain conservation improvements on their land. Funding opportunities for the Working Lands programs comes from the 2018 Farm Bill. Next slide, please. Typically, NRCS invests an average of $8 million every day into conservation systems that help producers stay profitable and productive. Next slide, please. NRCS Working Lands conservation programs are EQIP, which is the Environmental Quality Incentives Programs. And that is one that we help address identified natural resource concerns. CSP is the Conservation Stewardship Program, and that one is for maintaining and improving existing conservation systems and enhancing those conservation activities that are already happening on the property. Participants earn payments for conservation system performance and the performance of their practices over time. The Agricultural Management Assistance Program is also known as AMA, helps producers use conservation to manage risk and solve natural resource issues over time. AMA works with the Agricultural Marketing Service and Risk Management Agency also implement programs under AMA. Next slide, please. So these conservation programs help address resource concerns. A resource concern is an expected degradation of soil, water, air, plant, or animal resource base to the extent that the sustainability or the intended use of the resource is impaired. So it might be a threat to water quality, air quality, or soil erosion. There's a whole list of resource concerns. Each program that we identified, AMA, EQIP, CSP, has their own priority resource concerns and specific initiatives that a planner will help you look at. NRCS assists the customers with ensuring that those program required resource concerns are assessed in their application for assistance. And then NRCS assists with identifying the best program fit for the client's objective. Next slide, please. So I focused a bit on energy practices with reference to NRCS's toolbox of more than 171 conservation practices. We address everything. We address resource concerns across the whole gamut of importance, and one of these is, and a couple of the focuses is inefficient energy use. So NRCS through the Farm Bill has, and the EQIP program has on-farm energy initiatives that a certain pot of money is set aside. I don't know what that is for New York for this round of EQIP, but there's a certain amount that's set aside for an energy focus in each state, which would be considered the energy initiative side. And these are for making voluntary improvements that can boost energy efficiency on the farm. So we offer a couple different ways of getting to an energy practice, or if energy is a identified resource concern, one could have an energy audit performed and receive financial assistance for that energy audit. And they could also receive financial assistance to have somebody do a design for the implementation of an energy conservation practice. The different practices that we offer that address energy as a resource concern is farmstead energy improvement, which is generally a catch-all of a lot of different practices. We have lighting efficiency conservation practice, building envelope efficiency, combustion system improvement, pumping plants. In agriculture operations, they have found that the windbreak or shelter belt establishment provides an energy efficiency. Irrigation water management, there's energy efficiencies that are built into those plans, as well as the supporting irrigation practices for those. On this presentation, you can see the location and link to more information on our EQIP program. Next slide, please. For the conservation stewardship program, again, we're maintaining existing conservation systems, or perhaps enhancing them a bit to further receive or further that conservation benefit from those existing systems. So you may see, you may already have an energy efficient, something that may be already a conservation practice that's operating that you could be more energy efficient. And these practices would also include energy improvement, pumping plants, irrigation water management with those irrigation practices, and then these enhancements to a no-till system or a reduced tillage system, and an evaluation on whether a pumping plant could be more efficient. Next slide, please. And then we have the AMA. This year, our AMA offerings for risk management are in more of the urban agricultural areas, but practices that are available to those urban areas are, on the energy side of things, could be a farmstead energy improvement, lighting, building envelope, combustion system improvement, pumping plant, windbreak establishment, again, irrigation water management, and associated irrigation practices. Next slide, please. So some of the practices that would fall into that catch-all of farmstead energy improvement and lighting and building envelope would be more efficient lighting, going to LED lighting, plate coolers, ventilation and fans, irrigation pumps, grain dryers, engine replacements, fuel use reduction, greenhouse improvements, maple syrup evaporators, heating and refrigeration units, insulation and building envelope sealing, motor controls, and variable speed drives for motors. Next slide, please. So to receive assistance with NRCS, it starts out with a conservation plan. So make an appointment with your local NRCS to create a conservation plan. Each one of our websites has a contact portion where you can go to find who your representative is at the USDA local service center to talk to about entering into or beginning a conservation plan. Next slide, please. So in that planning process, usually starts with the producer identifying that they have a potential resource concern that has come to their attention, that they would like to look at our menu of conservation practices that they could begin to implement to try to resolve the issues that they foresee. So they'll come to NRCS and we'll begin that pre-planning and observe and take an inventory of what's out there on the ground, and identify and help during that plan, identify the resource concerns and measure them to further identify how that resource concern potentially could be treated and what the extent of the resource concern is. Then they'll work with the landowner to formulate alternatives and create a full-on conservation plan to identify how one would get to that next stage to address it. And at this point, the participant may decide, I'd like financial assistance to really implement how that's going to go forward. Or the landowner could decide that they don't need the financial assistance and would like to go down the technical assistance path of receiving assistance towards that implementation. But we're going to go down the path of seeing how the financial assistance process works. So we'll go to the next slide, please. So the conservation plan is built, and there's items of work that would be identified as this practice is going to be implemented to treat the resource concern this way. And it actually identifies the land unit and location on the farm that those practices will be applied. Next slide, please. So once you have the conservation plan, then we can take a look at the financial assistance. For energy practices, typically folks don't come to NRCS with an energy audit, so they may apply for financial assistance funds to obtain an energy audit. In order to get to the installation of an energy practice through NRCS, you have to have a ASABE S612 type 2 audit, which is the industry standard that would identify that energy is a resource concern, and this is how it can be addressed. So we'll go with, we got the conservation plan, and the next step is we apply for financial assistance funds because we have an audit. Next slide, please. Because you have an audit, we can then identify and verify that a resource concern is eligible. So then we enter into an application for financial assistance. And that application for financial assistance would be for practices that you identify that you would like to implement. So be it a lighting system, building envelope improvement, or a farmstead energy bunch of practices. The landowner has identified that that's the way they want to go forward, and these are the practices that they want to implement. So they're going to address the resource concern this way. So next slide, please. So they'll go and the producer has to have established records with FSA, and then they begin the application process. With our programs, our applications are accepted on a continuous basis. Dates are set periodically for batching applications so that ranking and funding considerations can be done for what we have available in the queue. Check with your local NRCS office regularly because there are cutoff dates where that batching has to take place, and that's the best time to work with your planners to find out if the conservation plan can be completed in time for that batching. Next slide, please. So from the conservation plan identifies the resource concern. We do an initial assessment of the items that are identified as resource concerns, make sure that each one of the resource concerns that each program requires have been assessed. Subject matters experts will actually work with the applicant to develop a fully develop that conservation plan, something that's feasible to move forward. The state office will then select applications for funding based on ranking. All programs are competitive, so applications are batched, and then folks that apply for each one of the programs inside each one of the initiatives are then competed based on the extent to which the resource concern is an issue. And the applicant signs a contract to implement all the practices they chose to treat that resource concern. Again, NRCS is always accepting applications. Funds are limited, so applications are batched. Ranking considers each applicant's initial assessment and the proposed level of treatment of the resource concern identified. And conservation plans are developed for each application. Next slide, please. And that's my last slide. My name is Paula Bagley. I'm the state conservation engineer for New York. To learn more about our programs and what's coming up or deadlines, honestly, your best contact is your local service center.
Hello, everyone. My name is Jacob Evans. I'm with Farm Service Agency. I'm a loan officer here. So let's get right into a little overview of Farm Service Agency. If you go to the next slide, please. So the Farm Service Agency, we're part of the U.S. Department of Agriculture. Our focus is implementing agricultural policy, administering credit and loan programs, and also managing conservation, commodity, disaster, and farm marketing programs, with a national network of about 2,100 offices. All right, next slide. So for FSA, there's two different divisions within it. There's the farm programs, and then there's the farm loan programs, which I'm a part of. For FSA, so it's designed to help farmers start, purchase, or expand their farming operation if they cannot get credit elsewhere. Big thing is that we are just, for starting credit, we aren't competing with the private sector. We're just government credit. So we're actually looking to graduate people to private credit as kind of the long-term goal. So different types of loan depending on what your current situation is and what you need the loan for, which I will go into more depth later on. So loan officers were always available to answer questions if you need any help with the application process or just have general questions about the applications and the processes that we have. And we also try to place a special emphasis on providing loans to beginning and targeting historically underserved farmers. Next slide, please. So for the general eligibility requirements, we require you to be a U.S. citizen for qualified or non-citizen national legal capacity to incur debt, especially for LLCs or any entities, acceptable credit history, can't be delinquent on any federal debt, that includes student loans as well. You also need applicable training or experience in managing or operating a farm. Owner operator or tenant operator of a farm that is not larger than a family size farm, and again, unable to get credit elsewhere. So who is a beginning farmer? An individual who has not been operating for more than 10 years. And if the applicant is an entity, then all members must be eligible for that 10-year requirement as beginning farmers, for everyone to be a beginning farmer. Next slide, please. So for the specific beginning farmer program, there's the direct down payment, the farm ownership program, which is 1.5% for interest. And there's the joint financing program, which is 2.5% interest. And we also have youth loans, which those will be a maximum of $5,000, and the age limit for that is 10 years to 21 years old. So for our direct farm loan program, we have the farm operating loan, which that is a maximum of $400,000, and that'll be between 1 and 7 years. You have to have participated in farming for at least a year for that loan. Then for the farm ownership loan, that's a maximum of $600,000, and that can be a term up to 40 years. But for that loan, you have to at least participate in farming for at least 3 out of the 10 most recent years farming. All right, next slide, please. So for the microloan program, has a cap of $50,000 and that's for both operating, and there's farm ownerships available for both of those. It's a little bit simpler application process, less paperwork, less verifications that are required. It is a reduced security requirement as well. We can do a full, what we say, 1-to-1 for loan value for the security value. And mentor can actually replace a farm experience requirement, but that is on the operating loans only. Next slide. So in order to apply for an FSA direct loan, you need some sort of business structure for the application, what type of operation you are, any education, training, farm experience, background in ag that you have, put right on the application, a business plan for what you plan to do, what you already are doing, the amount and the purpose of the loan. It's nice to see a nice breakdown for what exactly you're going to use the funds for. Any historical, financial, and production data if you have it, or there will be a projection if you are a new farm starting out, what the first year and next first couple of years are going to look like for your business. Next slide, please. So we are supervised credit. We do require the record keeping. You have to keep records of everything going on with the business, all the financial information. You'll have to turn that in annually for us. Borrower training, depending on what your background is. If you have operated multiple years, if you're just starting out, you may be required to take borrower training for production or financial. And as I stated, the end goal is to graduate to commercial credit. That's really where we want everybody to be working with lenders such as Farm Credit East. And one of the big things for us also is the environmental compliance. So for the farm ownership loans, if you plan on doing, say, putting up a barn, or before you do anything before the project starts at all, you got to talk with us first, because we need to do reviews, and we can't do a review if the ground's already been broke, then we're automatically ineligible. Next slide, please. So currently right now, our interest rates as of this month, we're looking at it for direct operating loans is 1.5%, and for the direct farm ownership loans, it's 2.875%. Next slide, please. We also offer the guaranteed loan program. So these will be loans that are made by banks to farmers, again, such as Farm Credit East. This is to help move towards getting credit from commercial sources. So the bank would be our client, and then the farmer would actually be the bank's client. The loan would be made at the bank's rates and terms to the farmer. And we generally will guarantee up to about 90% of the loan. And that program can be a maximum of $1,776,000. Next slide, please. So for the youth operating loan, this is designed to finance income producing ag related projects. But the projects do have to be of modest size, educational. They have to be supervised in connection with some sort of youth participation, like 4-H, FFA, or something similar to that. The projects must produce sufficient income, and they'll need to repay the loan. That does have a $5,000 maximum with no minimum, but it does have an age range of 10 to 21 years old. Next slide, please. So on the farm program side, they have farm storage facility loans. These are very low interest finances to build, upgrade permanent or portable storage facilities and equipment. So some of the eligible commodities are grains, including malted, hay, forage, fruits, vegetables, milk, butter, cheese, yogurt, meat, poultry, and eggs, honey, maple sap, syrup, hops, floriculture, aquaculture, and hemp. Next slide, please. Some of the uses for this are hauling trucks, which does include refrigerated trucks, refrigerated or freezer units, hay storage, including pole barns. The big thing for those is they have to be used to storage just the hay, can't be for equipment. Cold storage, which includes handling, washing, packing equipment, grain bins, cribs, which includes drying equipment as well, hop and hemp storage and drying equipment, silage bunks, and they also have skid steers now that qualify under this program as well, but for the handling. However, it has to be something that you're producing. So if you're buying in feed of sort, that wouldn't qualify. Milk houses and equipment, including milk tanks and sap tanks. Next slide, please. For some of the requirements for the FSFLs, so unlike our normal loan programs, the FSFLs are available even if the producer is able to get credit elsewhere. Eligible borrower is anyone who produces an FSFL eligible commodity. You also will need to demonstrate the need for the additional storage as requested. And these loans will max out at $500,000 per loan request. The down payment is required 15% on loans that are going to be over $50,000 and 5% on loans that are under $50,000. And they will also have to meet the same environmental compliance as the direct loans. Next slide, please. So the FSFL loan rates, they're very low. If you look down through the interest rates, there's 0.25% for 3 years, 0.75% for 5 years, 1.25% for 7 years, 1.5 for 10 years, and 1.75 for 12 years. And that interest will be fixed for the life of the loan, and installments will be made on a yearly basis. Next slide, please. This is some just more sites for information. The very first site right there, fsa.usda.gov. You can go on there to find a lot of this information along with an office locator too, to find one of the offices closest to you. I believe that is the last slide. Thank you.
Okay, thank you to all of our presenters. We'll now jump into a Q&A. Feel free to use the Q&A option in the Zoom, or you can raise your hand and I can unmute you and you can ask your question directly. And if you're watching on YouTube, feel free to use the comment section. Do we have any questions for any of our panelists? Okay. Tom, I'm going to unmute you. Go ahead.
Hi, thanks for taking the question. I'm curious if several of these programs mentioned will be available for what I'm particularly interested in, agrivoltaics, something which would allow both the development of a farm for solar electric production as well as an ag-related product. Would this be considered, for example, a value-added service, or would we apply for that under a different program?
So the I guess I have to ask a little bit deeper into the question. Are you just referring to like solar panels in a field that maybe animals might graze in? Is that what you're referring to?
Animals grazing under and around, as well as hop production. Yes.
Okay. You know, as far as the value-added program, there's really not much you'd be able to gain by adding solar into the mix for project eligibility, because you can't use the funds to purchase solar panels or any of the infrastructure. It really comes down to post-harvest of the hops or post growing of or raising of the animals. On the renewable energy side, though, you can use the Rural Energy for America program to purchase and install, solar panels. If you want to ground mount them, with some sort of creative racking system, that's fine. But you can only use it for the purchase and install of the solar PV system. You couldn't use it to purchase additional animals or anything like that. So there are some eligible pieces in that with that avenue. I'm not sure if
Follow-up question.
maybe you could look at FSA.
Would funds be eligible for a community solar program as a rural business?
So the typical community solar projects have utilized our loan guarantee program through the Rural Energy for America program. Most of them, their project costs are north of $5 million. And in those circumstances, it doesn't make too much sense for them to even look at the grant program. We do have a limited amount of grant funds for New York State, around, I want to say, $800,000. And typically, community solar doesn't score as well, given the program criteria and the program score sheet, as well as smaller projects that want to put in renewable energy systems or energy efficient improvements for their own benefit. Most of them, I'd say, utilize the loan guarantee program, which has plenty of funds available, and it doesn't make too much sense for them to pursue the grant program.
Okay, thank you.
Any other questions? Feel free to raise your hand or type into the Q&A box. Okay, I'm not seeing any more questions come in. The contact information for all of our presenters, along with this recorded webinar, will be posted on the SUNY Cobleskill website within the week. I'm sure I speak for all of the presenters. Feel free to reach out to them at their organizations for any additional information. I also encourage everybody to check out the rest of the webinars we have this week. Next one coming up is Wednesday with NYSERDA and National Grid talking about their energy incentive programs. If nobody has any last minute questions, we'll go ahead and log off. Thank you everybody for your time this afternoon. And we look forward to seeing you throughout the next 2 weeks.
Thank you for having us, Seth. Have a great day.